Hello everyone, and thank you for joining us for today's Your Overseas Home webinar. My name is Christopher Nye, Senior Editor at Your Overseas Home and France Property Guides. And today we'll be chatting with Malcolm McDowell from Chase Buchanan about the financial considerations you should think about when moving to France. It's great to have you all with us, whether live or catching up on demand. Now, we only have 30 minutes, so we'll get straight on. If you have a question, please type your query into the questions tab on the right-hand side of your screen. And if you need a reminder of anything discussed today, or you want to share this with family or friends, a replay will be available at the Your Overseas Home website to watch at your leisure. So, Malcolm, it would be great if you could please start by giving us a quick summary as to who you are and how Chase Buchanan can help our viewers today.
Okay, so good afternoon, everybody. Welcome to the tax guide for France and all the basic essentials for that. Just a quick little bit about myself first. Won't spend too much time on that. I am a private wealth manager who helps expats. I deal with people who are already international and those who are about to be international. And I have done that for the last 20 years. I have spent 18 of those years abroad myself, so a bit sort of been there, done that, got the t-shirt, thrown it away again. And I live here in the UK, and I continue to help my clients who are based mainly overseas, and most of them are Europe based as well. So I understand the pitfalls of going abroad and all the things that you have to kind of come out of the woodwork. So I'm here to help those people who are going through that process, because I've been there myself. Okay, a little bit about France and just general before we kind of start is the French tax system and the way that all works is kind of skewed towards going after the rich. So you'll see this when we go through the slides. It is a little bit more kind of, I suppose, the wrong word is, or the right word is sort of socialist, but they do tend to go after much higher net worth individuals. And so that's not to say they don't go after the lower ones, but they tend to go much more after the higher ones. And if you don't get your ducks in a row and don't become sort of France compliant, it can be very, very painful. So that's where I come in. I try and help people mitigate their tax as opposed to avoid it or evade it. Okay, so I want to make that absolutely clear. The first page I've got, we won't spend too much time on. Basically, this is the taxes that you will pay if you're earning an income in France. So some of you will, some of you won't. Depends on your circumstances. But think of this as like the equivalent to national insurance and the French equivalent to that. Okay, and those are the numbers as they currently stand. They do change. Yeah, and they tend to change on an annual basis. So the French I do fiddle with these numbers, and it's the same with income tax as well, which is onto the next slide. Okay, I won't go through those numbers, but they're pretty self-explanatory. Again, these change on an annual basis. They go up a little bit every single year. I wish they went up with inflation, but I'm pretty sure that they don't, especially given what inflation is at the moment. So just bear that in mind. They do tweak these every single year, so just keep up to date with what these bandings are. Okay, and you'll see at the end, you'll be able to see, looking at it now, which kind of bandings you'll be falling into once you move out into France and start earning an income. Okay. They also, as I mentioned a little bit earlier, they have a little bit of a special high incomes exceptional tax as well for those people who are doing rather well. So they do that for couples and for individuals, and they knock on another 3 or 4% depending on how much you're earning per annum, and it's on worldwide income. Remember that. Okay, so they'll be after what you earn, whether it's earned in France or whether it's an income coming from or dividends from the US or whatever it is. They don't care. They're interested in your worldwide income, and they'll be coming after that. So if you're one of the high earners, the French will be slapping on this extra tax here. Okay, so just be aware of that. Next, this is the one that most people want to know about. Okay, and I'll try to kind of understand. This is the wealth tax, but it's now the real estate wealth tax. So it really just applies to real estate. Okay, so let's go through this quickly. So anything over 1.3 million, yeah, in terms of the property that you own in France, yeah, will be taxed at that rate. Okay, if it starts going above that, you can see the bandings there, how much it's going to cost on a per annum basis. Okay, if it's anything, just to clarify also, if it's above 1.3 million, you start paying those taxes. If it's below that, you don't. But once it goes above the 1.3, you start paying between 800,000 and the 1.3, so 0.5%. So it kind of goes backwards on that one, but it's really anything above 1.3%, that's when you'll start paying tax. Okay. Another thing to bear in mind, as I mentioned at the top of the slide, it's okay if you've got properties and lots of them outside of France when you first move to France, because these properties won't be included on this list. For the first 5 years, you've got something to do about it. Okay, you can plan, you can maybe sell them, maybe sort of sort out some other kind of creative accounting. But the most important thing is that you've got 5 years before you have to pay any of these taxes on any properties which are outside of France once you move to France. Okay, so just be aware. So don't panic if you've got 5 properties and you're moving to France. Don't think you have to pay this tax straight away, because you don't. Okay. Movable properties. I won't spend too much time on this one, but it's important that we do talk about it. This is a tax that doesn't exist in the UK. So it's on things like paintings, if you're renting out a Porsche, or any movable objects which are not property and you're making money from them, or they are increasing in value. The French are interested in those. So they're usually for high net worth individuals, people who perhaps got large painting collections, this sort of thing. Just bear in mind that the French will like to tax those. Okay, so again, it doesn't exist in the UK, but it does exist in France. Don't come across it often, but I do need to make you aware of it. Okay, your UK pensions. This is another very important one. Bear with me a second. Okay, so UK pensions, income received in France is taxed in the UK first. Okay, let me just add a caveat to that. If you were to move to France and then start drawing on your UK pension without doing any preparation or anything like that, then yes, you will be paying tax in the UK first. Then you would have to make up the difference in France. Okay, that is a real pain, and I strongly suggest you don't do that. Okay, if you are going to draw on your pensions, your UK pensions while you're in France, there's a way of setting that up so that the money gets paid to you gross, and then you pay the tax in France yourself. Okay, and that's the best way to do it. I can help people sort that out. But if you don't get your ducks in a row, if you don't get yourself organized, and you just move to France and then start drawing on your UK pension, your state pension, whatever it is, you'll get taxed automatically in the UK. You don't want that. Talk to someone like me first. Okay. If you've got pensions that you haven't drawn down on yet, and you're going to move over to France and then start drawing down them in a year or 6 months or even 6 years' time, then talk to me, because there's going to be much more tax efficient ways of drawing down and amalgamating those pensions if they're all sitting in the UK. If you're basically a tax resident in France and you have UK pensions, then it's kind of oranges and apples. You really want to try and get an international pension that caters for someone like yourself, as opposed to just leaving it in the UK. International pensions are for people who are international. UK pensions are for people who stay in the UK. So you move to France and you've got a number of pensions UK, talk to me first. Okay. Next, inheritance tax. Whoa, this is a big one. Okay, very complicated topic. I've given a very sort of high level overview at this point. Basically, as soon as you become a tax resident in France, as far as the French are concerned, you are liable to inheritance tax when you pop your clogs. Okay, so and the inheritance tax, as you can see there, the tax-free allowance is only 100,000 euros, so much lower than what you have in the UK. So it's really quite gruesome. Okay, and this is something that you need to plan for. Okay, especially if you're getting older and so on and so forth. What I would say to you about inheritance tax is this: inheritance tax is something that you pay if you don't really like your kids very much. All right, so I know it's a bit funny, but it is something that you should really organize for well before your deathbed. If you try and organize it before on your deathbed, you're not going to have a chance. It's something that you need to sort out several years beforehand. Okay, and it's a completely unnecessary tax to pay. As it is unnecessary to pay it in the UK, it is also unnecessary to pay it in France. But you need to get yourself organized. And if you want to any help sorting that out, again, come to me. Obviously, it's going to be on a case-by-case basis. Everyone's situation is different. Okay. After that, okay, so asset portfolios. This is where it can get a little bit complicated if you've got capital redemption or life assurance policies. Okay, but put those to one side. If you've got any other investments that you've currently got, either with a bank or on a platform or whatever it is, the French will be very interested, obviously, in coming after that in terms of the capital gains tax. Okay, you will either pay income tax on it or the flat PFU 30% tax. Okay, so just be aware there are very simple ways of just making yourself French tax compliant, so that when you move over to France, you don't have to pay this tax. Okay, you can just sit inside a French compliant product and it grows with gross roll up and you don't have to pay anything. So again, talk to someone like myself if that's a situation that you're in. Okay, very important. And when it comes to capital redemption bonds and life assurance policies, they can get even more complicated because it depends what type of income and when were those premiums paid, yeah, as to how much tax you're going to pay. So it'll be very specific to your kind of situation. So just bear that in mind. If you've got any kind of investments outside of the UK or even in the UK and you're moving to France, the French will be very interested in the capital gains tax on those investments. It's very easy to mitigate it. You just need to put it in a French compliance product. Again, it's something I can help with. Okay, and then the final page. Like I say in the quote, we all have to pay tax. That's a given, but there's no need to leave it in. Yeah, and all I would say to it in sort of in summary is that at the end of the day, when you become when you're a UK tax resident, you do things almost automatically which are UK tax compliant. So you have an ISA, you may have a SIP, you may have some other type of investment portfolio, but it's always UK tax compliant. It's the same thing in France. So all you need to do is when you move to France, just become French compliant in the same way that you're UK compliant now. And that's what I help people do.
Great. Right. Thanks very much, Malcolm. That's really helpful. Now, let's divide our viewers into those who are retiring in France and those who are just buying a holiday home or a second home in France. So, thinking about the retirees first, how is their British pension taxed when they move to France?
Okay, so if they don't do anything about it and they just simply move over to France and then start drawing on either their state pension or their private pensions or their final salary pensions, then what the HMRC will do is tax it in the UK. And then it comes to France and you need to make up the difference. Okay, you either have to pay HMRC or you have to pay the French authorities. So depending on how much it is and so on and so forth. Very easily avoidable. Okay, just talk to someone like myself and I can set up something so that when you get paid from the UK, it gets paid to you gross. So you just need to basically start communication between the French tax authorities and the UK HMRC. Make sure these documents are stamped by both parties, and then the money gets paid to you gross, and then you simply pay the tax in France. Nice and simple.
Okay, now we've had a question.
Yeah.
Sorry, go on.
If you don't prepare for it, you'll pay the tax in the UK. And what HMRC have started doing recently is slapping, since Brexit, I've noticed, start slapping an emergency tax code on there.
Okay.
So be careful.
We've had a question from Alan who says, I have a SIP and could be drawing down up to 25% at 55. Is there a solution?
Okay, solution. I'm not quite sure I understand the question. You would draw down 25% at 55.
Yes.
Solution to what?
Well, I suppose you get tax free. So I think you've already covered this in what you said, but you can take out 25% of your pension pot at 55,
yeah.
and you don't pay tax in the UK.
Yeah.
But you will if you send it to France.
Correct. Okay, so if you're going to be drawing down your 25% tax-free lump sum, if you already hit the age of 55 and you have the ability to do that, then I would draw it down in the UK. Yeah, because then it's tax-free. Okay. If you then go to France and try and draw it down, the French will try and tax it. Okay, this is still going through the courts and it's still being challenged and so on and so forth. But the French will tax that. Okay, so if you are going to draw down on take your 25% lump sum, your PCLS, your pension commencement lump sum, then if you don't want it taxed, you need to draw on it while you're in the UK. Okay.
But I would guess if you're putting that into a second home in France, you are at least you're not paying the second home surcharge that you pay here. We pay 3% extra stamp duty, don't we, on a UK property?
Correct. Correct.
So you're saving that too when you buy property in France. Okay. Question from Jeremy. I have 2 pensions that mature in 5 years, but will be moving to France for 10 years. Can I convert these to gross payments when I move?
Okay, so what you can do is if you're not going to move for another 10 years, then you can take the 25% tax-free lump sums in the UK, but you can also obviously take them as entire lump sums because you have flexible drawdown in the UK. So that's not something I would advise necessarily, because at the end of the day, if I understand the question correctly, can I take it all out as a lump sum before I move to France? Yes, you can. Yeah, there's nothing to stop you from doing that. Only you might start getting Christmas cards from Her Majesty's Revenue Customs, right? Because you'll get taxed quite heavily because you'll be hitting higher tax bandings. Okay, so the vast majority of your money that you take will be sitting in a higher tax band. All right, so just be aware of that.
We've had a question from Matt, who says, "What are the implications if he moves to France and rents his home there?" I don't suppose that matters, and he keeps his UK property and rents that out.
Yeah, so we'll refer back to the page that I showed a little bit earlier. If you're renting out a property in the UK, no problem. It will be seen as income by the French, okay, and it will be taxed accordingly, okay. And then if it's over the 1.3 million, then you'll have the additional wealth tax, real estate wealth tax to think about as well. But you don't have to think about that for the first 5 years. So income tax, and think about the wealth tax after 5 years, depending on the value of the property.
Okay. Just a question on that rent on your movable. What was the word? I've written it down, but I can't remember. Or your movable wealth. How do they calculate that? I mean, if you go and you've got a lovely picture and a few pots and how do they? Does someone come round and do an inventory? I mean, that would be quite handy. No need for Antiques Roadshow. You can just get the British taxman around.
Well, first you have to declare it. Okay, so if you do have movable properties which you're making money from, okay,
right,
you should declare them. Okay, if for some reason they don't believe you or they want to check it, then they can rock up at your house. Yeah.
Okay.
All right.
That's interesting.
So,
okay.
And that happens. Okay, but just be aware, it doesn't happen that much. Most people have got their income coming from different sources, not from stuff that's sitting around in their house. Yeah, but it does happen. So if you've got high net worths with, like I said, paintings or fancy car collection, bike collection, stuff like that, then that's something that the French will be interested in taxing.
Okay. Now, thinking about those people who are buying holiday homes rather than retiring to France or moving to France full time. Now, we did a survey the other week. In fact, it's ongoing, and we asked people if they're retiring or buying a holiday home. And for the ones buying holiday homes, nearly all were planning on spending at least 2 months of the year in France, and 50% were planning on either working there definitely or maybe working from home, which presumably is within the rules because it's a holiday home. You're below the limits. What are the implications for them? Do they need to worry about anything? They don't have to declare that income presumably because they're still UK resident.
Correct. So the line in the sand here is the 183 days. As soon as you start spending more than 183 days in a year in France, then that's when the French, in a French tax year, okay, which remember is different to the UK tax year.
Okay.
That's where some people slip up. Okay. Then you're under the radar and you don't have any issues as long as you're not spending more than 183 days. So that's the case. So you can carry on. Let's say you've got a holiday home and you'll carry on working over the internet and over the telephone and what have you. No issue. Okay. They can't come after anything at all because you're not a tax resident of France. But as soon as you go over those 183 days, all bets are off. Okay, so just be very aware of that, and you'd be amazed how many people just count the days wrongly. You'd be amazed. Okay, so and then they get caught out straight away. Yeah, the reporting that happens between the UK and Europe, not just France but other European countries, is much more advanced than it was 10, 15 years ago. Banks are telling other banks who's got what, where, how many, where they tax resident, and you can't have a bank account unless that particular bank knows that you're tax resident in that particular country, and so on and so forth. So don't underestimate the reporting between the two countries. And also another thing I like to just throw in here as well, because I've come across it a few times recently, is couples who try to have one tax resident in France and another one and the other member tax resident in the UK. Yeah, that only leads to tears, trust me. And especially if you're trying to do that with domicility as well, okay? Because then you're asking for trouble, right? Because that's
really,
yeah, because that's all smoke and mirrors anyway. But if you're talking about having one member who's tax resident in France and the other spouse is tax resident in the UK, that can only lead to trouble. So that because what they all interpret it as is just people trying to do tax evasion. Right, we're putting certain assets in one person's name and certain assets in the other. Just go to France, make yourself tax compliant. It's very simple. Yeah.
I suppose the issue is if you are still working and one partner is still working and therefore can't work in France, and then therefore has to remain in the UK, and you kind of work in two homes. But anyway,
it can be tricky. So I'm not saying it's illegal, but some people do that in order to try and reduce their avoid their taxes. So that's not the spirit of what it's meant for.
No. Okay. Well, I mean, it's handy for us British people because France is so close, so we can just nip backwards and forwards. But what about, we've had a few questions from Americans, and we've had one from Bonnie, all about Americans moving to France.
Okay.
Is it basically the same as for the UK, and can you help them as well?
Yeah, well, we can help them. I would basically pass you on to our American expert when it comes to that sort of thing, because Americans are a slightly different kettle of fish, right? Americans from day one have always been taxed on their passports. Okay, so it's a very different thing. So as soon as I come across any kind of Americans, I deal with a chap called Alex Ingram, who's an absolute expert in on this side of things. Obviously, you talk to me first, I'll find out about your situation, and then I'll pass you on to Alex, because what he doesn't know about all these sorts of things, expats dealing in France, US expats, and so on and so forth, it's worth knowing. He's been there himself. He's an American expat himself, living in Italy. So these are all things that we can definitely help with, but you need an expert who specifically deals with that and is licensed to do that. Okay, so I'm not licensed to do that, but my colleague is.
Okay. We've had a question. When is the French tax year then?
Okay, it's January to December. Yeah, okay. Unlike us, who have the April nonsense. Right? We're the only people who do that.
What a great idea! Seems so simple now you mention it. Okay, is there an ideal question from Alan? Is there an ideal time to retire to France regarding tax?
An ideal time when you're ready. When you're good and ready. It's very different for different people. It's different for different individuals. It's a very difficult question to answer. It's you know, as soon as you start going into drawdowns on your pension, then and you want to go somewhere where actually the sun actually shines, then yeah. But that's a very hard one to answer. Is there any specific time of year? No, not really.
Okay.
Yeah, not really. No.
Okay. Question from Carolyn. I'll rephrase the question. Can my son buy me a house in France to mitigate inheritance tax? She's paying, but putting it in her son's name to mitigate inheritance tax, but she'll live in it.
No. No, they're red hot on that kind of stuff. They don't recognize that. So yeah, for example, they don't recognize trusts. So anyone who's got stuff set up in trusts, I didn't mention it in the thing, but French don't recognize trusts, for example, all that kind of stuff. So they're red hot on that kind of gifting, and and also people hiding stuff in companies and lending money to the company and then getting the company to pay them money and avoiding income tax. They can do that in the UK. You can't get away with that in France. Yeah. So no, they'll come after that kind of stuff. Be very careful with that. If you want to mitigate inheritance tax, there are ways to do it, but that's not one of them.
Okay. Yeah. When I used to be self-employed, I just remember the filling in the tax forms as being the biggest nightmare of the year. When we moved to France, can you sort all that out for us, or is there someone to help us? Is it in English, or is it a bit of a nightmare?
No, it's not a bit of a nightmare, but you just need to get someone to help you with it. I mean, I don't fill tax forms out for clients, but I can point them in the right direction of accountants who will do that kind of thing for them. Yeah, so we do have, not that we have anyone that we prefer, but yeah, we can point people in the right direction. But that's not something that I would do myself.
Okay, but fair enough. Okay.
Tax forms for clients.
Kate has asked, I guess this sort of relates to what we were talking about earlier. We want to move to France to live. Can my husband still work for his UK firm from France? And how would that work with taxes and residency?
Yes, of course he can. Yeah, no problem at all. Yeah, that's not going to be a problem. It's just, where is he doing the work? Yeah, so if he's going to spend more than 183 days in France doing that work, that's when he becomes a French tax resident. Yeah, if he does some of that work in the UK, more than 183 days in the UK, he's a UK tax resident. Yeah, it doesn't matter where the company's based. It's irrelevant.
Okay.
Yeah.
Well, we've actually run out of time. Is there anything that you feel we should have asked, and that you just, any points that you want to make before we close?
Well, no, not really. But it's just all I would say is reiterate something that I mentioned before. Don't be concerned about. I mean, there are lots of complicated rules, especially when it comes to inheritance tax and things like that. But these are all things that can be mitigated. Yeah, right. Don't try and do anything cheeky just because there are rules and regulations which you can use, which are perfectly legal, to mitigate your income tax, mitigate your capital gains, mitigate your inheritance tax, and mitigate IHT. Yeah, so just bear that in mind. There's perfectly legal ways of doing it. Don't try and be cheeky. Just talk to someone like me. If I can help you, I can help you. If I can't, I can't. But those are the things that you just got to bear in mind when you move to France. Just get yourself French tax compliant. Simple as that.
Okay, fantastic. Well, thank you again, Malcolm, for all your insightful tips and advice. We do recommend that our viewers get in touch with Chase Buchanan directly to discuss your requirements in detail. We've had lots of questions that we haven't had time to answer, but we will send you, well, in fact, you can see them on the screen there, Malcolm's details, and you can ask Malcolm directly. And you'll find a whole lot of information either on the France Property Guides website or Your Overseas Home. We're gradually moving property guides into Your Overseas Home, so that's why we have both brands at the moment. So thank you to all our viewers for watching this session. We wish you the best in your move overseas. Do take a look at our websites. Thanks again, and happy property hunting. Thanks very much, Malcolm.
Thank you.